Listen, we've been waiting for this pullback since the March lows. The market just continues to go higher. Is there anything you see that indicates a pullback may be forthcoming?
I think that there could be a lot of emotion coming up in the next several months. I've got clients who are really genuinely worried about the election. So you've got the election and we've got a vaccine coming, but the timing isn't definite yet. So I think that emotion could come in and could create bumpiness and rockiness. Within that, I think we're still upward trending, but that's long term for me. It's not unique. I think we're upward trending forever. And there will always be bumps, really significant bumps too, along the way.
And what would the cause of said significant bump, what would that be, Jenny? Could it be the election? Could it be more lockdowns, China, volatility, what?
I think it's just fear and disappointment along the way. Like, let's say people are truly expecting a vaccine in December or January, and those projections get pushed off for whatever reason until February or March. That disappointment could weigh on the market. If the election becomes more uncertain than it is and things start to get volatile around who's likely to win, I think that could create disappointment and anxiety. I don't think that I don't think the market's going to be derailed by huge earnings disappointments or by big economic data. That we kind of know what's out there already. We know what's coming. We've seen earnings beat this quarter. So I don't think that's where the pain's coming. But getting back to this Barron's article and the thought of the market being bumpy and taking cash, on that, I don't think that article is great advice for everybody. What it's saying is, we've had a big climb, it's time to build cash, take advantage of stocks tumbling. Okay, that's short-term advice for people who have short-term needs. So if you have short-term needs, like tuition or a new car or you're buying a house, then follow the Barron's advice. Take some cash, put it on the sidelines. If you're a long-term investor, that's ridiculous. Don't listen to that article because over time, the market will continue to climb in the long run. And I'll tell you one thing, you're not getting it right in terms of taking cash now and getting back in at exactly the right time to create great long-term returns if the market just tumbles based on emotion over the over the election, based on emotion over disappointment over a vaccine. So read that article, but it's not for everybody.
Yeah, I mean, if you're trying to time the market, you're probably the guy that also hits on 17 at the blackjack table, Jenny. It just doesn't pay off over time. Where are you seeing, you've always brought us these great ideas kind of under the radar. Where are you seeing value right now?
Sure. So I loved these David Tepper moves, and this really supports what I've been seeing in the market, or what I've been expecting from the market, where I think we don't need the big guys. We don't need Apple, Amazon, Google. We don't need them to continue to lead, and there is tremendous value in the other 490 stocks. So one of the things that Tepper added, which I've been talking about our ownership in for a long time, is AT&T, where you've got a stock trading with a 7% dividend yield, a tiny multiple, paying down debt faster than they expected it to. You've got him adding things like Visa, I meant to say, and T-Mobile. I think there's value in those kind of names, so I was excited to see those supported. I think it was interesting to see Buffett trimming his bank positions because, to the point of one of your earlier guests today too, I think there is value in the banks, particularly if we do see a little bit of inflation or start to see interest rates rise. The banks have been treated like death. So I don't own Wells Fargo, but that's a decent idea. It's a great idea.